And it's today, NFP day. Market will be crazy. It's Friday. You know, it's the beginning of the month, 2nd of August. You already know what's going to happen. The US dollar will be weakening. All right, and this is my take for NFP tonight. So stay with me until the end of this video, because now you know that US dollar is weakening, but what are the targets that I'm aiming? You don't know. So stay with me until the end of the video that you will know what is going on with the market. Now, before we start, please thumbs up on the video, subscribe to the channel, and in the end, send this video to your friends, all right? Because this will help them to know what's going on with the market tonight. All right, so tonight, 10:30 p.m. in Australia time, we're gonna be having non-farm payroll for July, unemployment rate, average hourly earnings, private non-farm payrolls, average hourly earnings year over year from July last year to July this year. And then we have participation rate and U6 unemployment rate. Right. Before we actually start into the content, I want to just clarify some things here, right? It's not only the non-farm payroll that will move the market, will move the sentiment of the market. There is all the data that comes up as well as the unemployment rate and the average hourly earnings that do, in combination with the non-farm payroll, get the market somewhere, all right? So I highly always recommend people to not only look at the non-farm payroll and look, yes, plus unemployment rate and plus average hourly earnings. So let's have a look at what are the provisions, what are the consents for these three data sets. So for the non-farm payroll of July, previously been 260,000 on June, now they're expected 176,000 on July. The unemployment rate to remain the same at 4.1% and the average hourly earnings to remain the same at 0.3%. Now, what do I think about those numbers? I do think that yes, the unemployment rate will most probably maintain between 4.1 to 4.2, but the average hourly earnings may decrease a little bit, and the non-farm payroll may decrease as well, maybe to 160,000, and this would be the lowest point, if I'm not wrong, of this year, all right? Because 176,000 was the second lowest, and I'm believing that we may have a first lowest now tonight at 10:30 p.m. All right, so what are the big take and why is this non-farm payroll so important? We did had the Fed yesterday, 4 a.m. in the morning on Australia, pausing the rates, having no changes on the interest rates for US. And the big thing about today's NFP is that the Fed is looking for the labor market plus the dual mandate that they're having. That is the labor market and the inflation. All right. So now the Fed is really attentive to both risks tilted to the higher to the downside of both of the dual mandates, all right, labor market and inflation. Before they weren't, they were only looking for the inflation. Now that they know that inflation is coming back lower at the levels of 2%, but it's in 3.2%, so you still have 1.2% to do a job. And this is my opinion, all right? I do believe that they still have to maintain rates higher for longer. Maybe if this NFP comes higher than expected, that I don't think it will, then we may probably look at a Fed only cutting in November after the September meeting, okay? If this NFP comes lower and, you know, unemployment rates continue to remain the same, then yes, as Jerome Powell said, unemployment still at 4.1% and will permanently stay there for a while. And this is not the end of the word, because this is not even in the historical highs. I'm not sure what was the historical highs of unemployment rate in US, but I can guarantee to you that yes, this is high, all right? And he's just saying this because he has to see, he has to say. Now, what are my takes for trading the NFP tonight? Most probably euro dollar have pulled back a little bit, but it will have a higher move in the next week because of the NFP release. After that, we may continue to look at GBP USD going lower, but then next week we will higher. USD JPY, most definitely, we can continue to see a contraction of between Bank of Japan and the Fed. And we can most probably look at USD JPY coming back lower another 1,000 points. All right, this is my opinion. 1,000 points, 100 pips. So this is my opinion on these three pairs. Now we can continue. We can see that the DXY, the dollar index, may be dropping. All right, and as I just mentioned, have your eyes on the three data. All right, it's not only one data. If everything comes mixed, then it doesn't make much sense. We don't know it with precision, but for sure that we need to understand what sectors are maintaining the jobs on US, and we will only know once the BLS, the Bureau of Labor Statistics of USA, releases on the 10:30 p.m. tonight. All right, guys. Thank you so much. Share this content with your friend. Don't forget to subscribe and give us a thumbs up, and I'll see you in the next week. Have all a great weekend ahead. Take some time to rest, take some time to study, and we will be back on Monday. Thank you so much, and I'll see you. Bye-bye.